Hello friends, in this lecture we are going to discuss a practical problem on the topic of guarantee of profit. In the last lecture I discussed about guarantee of profit. We discussed two cases and two practical problems, right? There was a case when the guarantee was given by the whole firm, that is all the partners, and there was a case when the guarantee was given only by a particular partner. Okay, remember friend C, B refused that I won't sacrifice in favor of A's friend C. A should sacrifice his share, right? So now let's see another practical problem covering both the cases. So the practical problem is A, B, C and D are partners sharing profits and losses in the ratio of 4:3:2:1, right? So let us write down the facts. There are four partners A, B, C and D. Profit sharing ratio 4, 3, 2 and 1. Their capitals as at 1st of April 2015 were 3 lakh, 2 lakh 50,000, 1 lakh 50,000 and 1 lakh. Their opening capitals 3 lakh, 2 lakh 50, 1 lakh 50 and 1. 1 lakh 50 and 1 lakh. This is what? This is their opening capitals, right? Further, D's share of profits excluding interest on capital has been guaranteed by the firm to be not less than 2 lakh 50,000. Now this is a firm guarantee to D. Firm's guarantee is to D that a minimum profit of 2 lakh 50,000 excluding interest on capital. That is, while calculating this 2 lakh 50,000, we will not consider the interest on capital. We will not add interest on capital in the D's capital account. Okay. Let's read further. Further it says C's share of profits including interest on capital and salary guaranteed by A is not less than 2,60,000. Now C's share of profit is guaranteed by whom? A, his friend, his good old friend. A's guarantee to C, guarantee of 2,60,000. This is including interest on capital and salary. Further it reads, the profits for the year ended 31st March 2016 were 9 lakh before interest on capital at the rate of 10% and salary to C at the rate of 10,000 per month. Prepare the profit and loss appropriation account and distribute the profits. What are the profits we have? We have profits of 9 lakh, right? Salary is to C 10,000 per month, that is 1,20,000 for the year, right? And we have interest on capital at the rate of 10%. Clear? So this is the whole question. We have written down the facts. First of all, there are four partners A, B, C and D sharing the profits in the ratio of 4:3:2:1. Their opening capitals is 3 lakh, 2 lakh 50,000, 1 lakh 50,000 and 1 lakh. D has a firm guarantee of 2 lakh 50,000 minimum profits. C has A's guarantee of 2 lakh 60,000 minimum profits, right? D's guarantee is excluding interest on capital. C's guarantee is including interest on capital and salary. We have a profits of 9 lakh. Salary to C 10,000 per month, 1,20,000 for the whole year. Interest on capital at the rate of 10%. So let's prepare the profit and loss appropriation account. Clear? In examination, please prepare the proper formats. Okay, let's see. Now, first of all, we have net profit of 9 lakh. Okay, first of all, we'll give interest on capital to interest on capital. Okay, we have A's capital account. What is A's capital? A has a capital of 3 lakh, 10%, 30,000. Right? For B, B's capital account 2,50,000, 10%, 25,000. C's capital account 15,000, 1,50,000, 10%. And D's capital account we have 10,000. So total interest on capital comes to 80,000. Then we will pay salary to C. To C's salary. How much is the salary? 10,000 per month. That means for the whole year it will be 1,20,000. Clear? Now it is the turn for distribution of profits. Now see, out of 9 lakh, 80,000 is the interest on capital and 1,20,000 is the C salary. So how much profits we are left with? 7 lakh. 7 lakh profits we have to distribute. Now let's see the deficiency. Let's prepare the working notes for the deficiencies. I'll say working note number 1, calculation of firm's deficiency first. Now firm has a guarantee for D. Firm has given a guarantee to D. Okay. So I'll write D's guaranteed share of profit. D's guaranteed share of profit is 2,50,000. Okay. This share of profit is excluding interest on capital and excluding interest on capital. That's it. That means we will not add back interest on capital in this. And we will subtract what is the D's actual share in profit. What are the profits left with us? 7 lakh, 9 lakh, 9 lakh minus 80,000 minus 1,20,000. So the profits left are 7 lakh and D's share is 1/10. So the D's actual share comes to only 70,000 while he has been guaranteed a minimum of 2,50,000. So the deficiency of 1,80,000 will be borne by the remaining partners, that is the A, B and C, in which ratio? 4:3:2. Write down 1,80,000 deficiency will be borne by A, B and C in ratio 4:3:2. Clear? So how much will be the A's share in the deficiency? A's share will be 1,80,000 into 4 divided by 9. That comes to 80,000. What is B's share? B's share will be 1,80,000 into 3 by 9, 60,000. And what will be the C's share? It will be 1,80,000 into 2 by 9. This comes to 40,000. So this is the firm's deficiency. Clear? What is the D's guaranteed share of profit? 2,50,000. What is his actual profit? 70,000. 1,80,000 will be borne by the remaining partners because it is a firm guarantee. All the partners have guaranteed him a minimum profit of 2,50,000. So it will be borne by A, B and C in the ratio of 4:3:2. Accordingly, A's share is 80,000, B 60,000, C 40,000. Clear? So let's prepare working note number 2. Calculation of C's deficiency. Okay. To be borne by whom? His very good old friend A. Right? To be borne by A. Let's see. What is the C's share in profit? What is the C's share in profit? Profit is 7 lakh. What is the C's share? 2 by 10. This comes to 1,40,000. Now, C has something to pay to the D because we have a firm guarantee to D. In the firm guarantee, C is also liable to pay his share of profit to D. Less firm deficiency to be borne by C. How much it is? 40,000. So what are the profits? 1 lakh. Right? Now his guarantee is including interest on capital and salary. It is given in the question. C's share of profits including interest on capital and salary. That means we have to include capital and the salary in this. Add back. Interest on capital. What was interest on capital for C? 15,000. Right? And what is the salary? 10,000 per month, 1,20,000. So we have 1,35,000. A total of 2,35,000. Clear? Now, what is the guaranteed amount? Amount of guarantee. $2,60,000. So what is the deficiency to be borne by whom? A. This is deficiency to be borne by A. Clear? So all in all, A is at the receiving end. 80,000 deficiency, firm deficiency, 25,000 towards C. Right? A is at the receiving end. Everything A has to pay. Why? Because he has the highest share in the profit. You pay everything. C is your friend. You pay. Okay. So let's see. Let's see the distribution of profits now. Okay. Now I'll say two profits transferred to. Let's see what are the profits transferred to A's capital account. Now out of 7 lakh, A has a share of 4 by 10. Okay, so that comes to 2,80,000. Out of this 2,80,000, how this 2,80,000 is? 7 lakh into 4 by 10. Clear? Out of this 2,80,000, he has a firm deficiency of 80,000 and he has 25,000 towards C. So what will he get? He will get only 1,75,000. Clear? Now let's see what will B get. Now B's share is 7 lakh into 3 by 10. This comes to 2,10,000. Okay. 2,10,000 minus he has the firm deficiency for how much? 60,000. So he will get 1,50,000. Clear? Now for C. Now what is the share for C? 7 lakh into 2 by 10. Right? This comes to 1,40,000 minus the firm's deficiency 40,000. Add deficiency recovered from A 25,000. Right? So this comes to 1,25,000. Right? What is D's capital? D's capital is, D's share is 7 lakh into 1 by 10, 70,000 plus deficiency from firm 1,80,000 So he will get 2,50,000. Clear? So in total we will have 9 lakh. Clear? Right? Now for C, he was guaranteed a minimum of 2,60,000 including the salary and interest on capital. So he's getting 1,25,000 as the profit, 1,20,000 as salary. So it becomes 2,25,000 and 2,45,000 and 15,000 as interest, 2,60,000. Clear? So this is how the profit distribution is. Okay. So you can write this down. You can write these working notes also. If you have not written, I'll show you the working notes once. This is a very good question. This covers all the aspects of the guarantee of profit to a partner. It is covering both the cases where there is a guarantee by the firm and where there is a guarantee by one partner. Okay. So you have to prepare these working notes in the exam, and in the final answer, that is in the P&L appropriation account, you can give the reference to the working notes. Right? This is C's deficiency to be borne by A. It is always advisable to write down the facts of the question. You get a very much clarity of the question. What is question asking? How I have to attempt the answer. While you are writing the facts about the question, during that writing only, half of the solution is there in your mind. Rest half you have to write down just. So if you have time, always prefer writing down the facts quickly. You can do it in the rough work, last page of the examination sheet. Okay? Because you get clarity. This is how you get clarity. You have all the facts at one place. You don't have to look in the question paper again and again. Clear? So this is your P&L appropriation account. This is how the profits have been distributed. So you can always write here, you can write it in the next line and give reference to working note number 2. Working note number, 1. This is working note number 2. Right? So you can always give reference like that. The most important thing is the concept should be clear to you. What is the concept? What is the logic behind the concept? Then what the examiner wants from us? What the question is saying? What solution is? Okay? So this is your P&L appropriation account, right?